The idea behind life insurance as it exists today was first conceived in the late 1800s by a French mathematician named Antoine Lavoisier. As pioneers of statistical analysis, he and his colleagues figured out that the time to pay someone's life insurance premium should be based on their age and other physical factors, because those are the best predictors of how long they would live. Life insurance is a financial product that provides protection against the risk of death. The purpose of life insurance is to provide for your dependents in the event of your inevitable death. Insurance companies will pay out a lump sum to the beneficiaries if the insured person dies while their policy is in force. The decision to buy life insurance can be difficult, but it's an important decision for you and your loved ones. It can provide much-needed funds when it's needed most, which is when the person who would have paid those bills has passed away. Life insurance is not always included in a financial strategy because oftentimes people do not want to think about the negative side effects of life insurance. Instead, they should be focused on the positives, how it can provide benefits to their family should they pass away. But life insurance should be included in every financial strategy because it provides security for one's family and ensures that they are taken care of if something were to happen. Life insurance is one of the most important aspects of planning for retirement. It is important to note life insurance is essential for anyone with dependents. It can be used as a way to protect your family in the event of your death, but it can also be used to help pay off debts and provide for retirement. In addition, life insurance can be used to provide protection against high medical expenses in case of a fatal illness or accident, to provide protection against high medical expenses in case you are diagnosed with a terminal illness, to protect retirement funds from loss if an employee dies before retirement. The two most popular types of life insurance are term life insurance and whole life insurance. Whole life insurance is often encouraged by banks, but term life is just as effective for preventing economic risks. Term life insurance is a type of life insurance that doesn't have an investment component. It's the most affordable option for many people, but it does come with limitations. Term life insurance typically has lower premiums than whole or universal life insurance, so it can be a good option for those who are on a tight budget. Even though term policies are usually less expensive, they also don't offer as many features to protect your financial future as whole or universal policies do. That's why some people will need both term and whole or universal coverage if they want to safeguard their finances. Term life insurance doesn't increase in cost over time like whole life insurance does. This makes it the more affordable option. Life insurance rates are based mainly on factors like age, sex, smoking history, health status, and other personal factors. Term life insurance offers lower premiums than whole life insurance because it is guaranteed for a certain amount of time, while whole life has an indefinite period of coverage. Term life also doesn't require a physical exam, blood test, and electrocardiogram, while whole life does to determine your risks for heart disease or cancer. Whole life policies accumulate cash value over time, which can be used if the policyholder chooses to surrender their policy before age 65. Whole life insurance pays the beneficiary a lump sum after the insured death. The problem is that it guarantees a substantial sum to an individual who does not have to make monthly payments or maintain any health standards to keep their policy active. Term life insurance is more affordable than whole life because it only pays out if the insured dies during the chosen period of coverage. Term life insurance is the most common type of life insurance coverage offered by companies. The price of term life insurance is more affordable than other forms of coverage. The average cost for $500,000 worth of coverage on a 20-year term plan for a healthy 30-year-old is $24.86 per month. If they are 50, the cost jumps to $37.91 per month. Whole life insurance provides coverage for your entire lifetime and guarantees that you receive a sum for all or a percentage of your death benefit, depending on the type of arrangement you have with the company. However, it is more expensive than term or universal life coverage because it pays out a small monthly income to ensure that the policyholder gets a return on their investment until they die. The premiums can fluctuate in accordance to market conditions and in some cases increase in rate. But this will not affect any benefits paid out from the policy unless it falls below certain thresholds where premium payments will halt completely. The amount of life insurance you need should be based on your debt and other obligations, savings and investments, and projected future income. Life insurance is one of the most important aspects of retirement planning. A life insurance policy is the single most important financial planning tool that most people don't have. The amount you need to buy will depend on your age, other obligations, savings and investments, and projected future income. Before buying a life insurance policy, you need to consider the following factors: the size of your family, your net worth, your mortgage balance, the age of your spouse, your budget for the monthly premiums. The amount of life insurance coverage that you need is often determined by your age and the amount of debt you have. People who are young and free from debt might not see a need for life insurance at all. In general, it's a good rule of thumb and recommended to get at least 10 times your annual salary in coverage. Buying a term life insurance policy instead of whole life for the amount that is based on your individual needs can save you hundreds of dollars over the life of the policy. You've been watching Budget Wrench, the channel that helps you upgrade your budget and puts that extra cash back in your pocket. Stay tuned to find out information on how to adjust your current budget and put hundreds of dollars back in your pocket. Thanks for watching, and as always, keep upgrading your budget.